Hello and welcome to the week ahead, beginning of the 24th of April. Well, it's a bank holiday in Australia on Monday, but nevertheless, we are obviously starting to look at the likes of the miners and, of course, that of the commodities themselves. So there is a good chance we could see some retracement in the Aussie dollar over the near term. Certainly, the lack of action that we've been seeing today to the upside would tell you that that is probably going to be the case. And looking at the dollar index itself, the fact that we have found support around the 93.90, 94 level would imply that we have some short-term upside left in the US dollar, certainly for the time being. So what I'll be looking at there in terms of the Aussie is for a small retrace to the downside. Now, we may not necessarily have hit the highs for the time being, but certainly it would look to be bearish below that 78.50 level. So looking below that, we would see a drop towards the 77.10 before the 76.60 level. Any rise to the 78.50 would negate this particular trade and see a rise towards the 79.30 zone. Later on the week, though, we do have a little bit more information coming forth from the US in the form of durable goods orders, and of course we have flash services PMI and consumer confidence also. Now, if we look at the microclimate, certainly Caterpillar would tend to make you believe that the global growth picture, even in the US itself, is not necessarily firing on all cylinders. So this could very well lead to a pullback in the speculation as to whether or not the Federal Reserve will hike interest rates or not in the very near term. And we can expect on Wednesday to maybe see that either realised or capitulated upon by the Fed statement. The Fed funds rate is expected to remain in situ at 0.5% on Wednesday, but we could get a little bit more clues from Janet Yellen and her ilk as to what to expect from here. Obviously, data dependency will obviously be the major factor, but there is a lot of data that will be giving us a clue as to where the US goes from here. And the advanced GDP on Friday set to come in at 0.7% growth on the quarter from a rise of 1.4% on the previous quarter. We could obviously dial down some of those expectations if some of the data preceding it comes in lower than what is expected. Closer to home, however, we do have the GermanFO coming out on Monday, and it's expected to come in at 107. That's the GermanFO business climate. So it was 107, 106.7 the last time, and 107 this time is expected. And certainly the euro does seem to be very much trading in a range, finding a degree of support around the 112.50 against the US dollar, but still markedly unable to raise itself above that 114.60 level. So we remain rather range bound for the time being. And of course, anything from Mario Draghi yesterday gave very little clues other than interest rates would remain as is, if not possibly lower, depending, of course, on where inflation and, of course, credit is actually trading at. Over closer again to home, we have the UK, and we'll be looking at the GDP number there too. Certainly there's very little expected from the Bank of England in the near term, but ultimately the resistance at 144.25 against the US dollar on the cable there will hold it firmly backwards. Any rise through that, though, we could be looking at an inverted head and shoulders pattern on the longer term chart. And if that does actually complete, that could lead to a move back up to the 150 level. Now, this is a long-term view, most certainly, and obviously you have interest rate differentials creating some sort of disparity here. For the time being, most would be expecting to see a rate cut ahead of a rate hike, considering that we have the EU referendum to look forward to in June. So one to watch there, certainly. Then we have the Bank of Japan, and it's been very interesting when it comes to the Bank of Japan. They introduced negative interest rates, and yet we saw the actual Japanese yen strengthen quite considerably, particularly against the US dollar over the last quarter. So one questions whether or not the data due on Friday will lead them to do something a little bit more extravagant and ultimately a little bit more creative. We are expecting to see household spending coming in on the year, an actual reduction of 4% there. Their CPI is expected to come 0.3% year on year, and then retail sales is also expected to falter, a fall of 1.4% on the year expected there. Now, when it comes to the dollar yen, we have seen a big squeeze, and certainly the dollar does seem to be taking advantage of some of the upside there. Now, whether or not we're in the middle of a bull market, or obviously this is a retrace in the centre of a bear market is anybody's guess for the time being. But I would be of the view that if we are falling, or if we remain below the 111.70 level, then I would imagine that that will cap the gains, and I would still be of the view that we could see strengthening yen, particularly with regards to equity markets being at where their highs are. There is a possibility we see some reversal there, which could bring about a bit of a push into the safe haven of the Japanese yen. That's it from me. Thank you very much.